7, 6, 5, 4, 3, 2, 1, 0.
Hey guys, welcome to Root Zones, bringing you the good news and the bad news of crypto. My name is Wayne, and if you like money and crypto, make sure to hit the subscribe button. So today Manish won't be here. He is working on a big project, so I'm just gonna do a quick wrap up on the markets today. Let me just share my screen. Today we'll be talking about something that was fascinating today. Let me just grab this up. So we have the US, right, that faces inflation higher over the last 30 years. So you can see that US inflation continued to roar higher as this week's data from Consumer Price Index, the CPI, jumped 6.2 from a year ago. Americans are concerned as the Federal Reserve have expanded the monetary supply like no other time in history. Now suppress the benchmark interest rates, and US politicians are creating multi-trillion-dollar packages with money that government doesn't have. The news of hotter usual inflation caused stock markets to fall on Wednesday, and the US President Joe Biden said the White House is prioritizing getting prices down. Wall Street also had a thing or two after passing 3 trillion yesterday. The crypto market began to decline. Most of the top 10 cryptos registered losses against a backdrop of a soaring inflation. Major US indices fell across the board. Even there was some misunderstanding in terms of Evergrande, in terms of not being able to pay back the loan. So all this coupled with this inflation after they have not posted this level of inflation for quite some time, but only recently, somehow US inflation has hit 3 decades, more than 30 years, the world's biggest economic struggle against a post-pandemic supply chain disruption. So top cryptos, of course, Bitcoin lost around 2%. Then and restored the same value at the time of the writing and changing hands for 65,000. Cardano has lost over 10% in 24 hours. XRP, Ethereum both registered small losses. Solana suffered a slight loss of all crypto in the top 10, and as well Dogecoin lost about 5.15 in 24 hours. Now they are still pretty high, a bit above the day chart, which I'll show shortly over the Bollinger, but on the 4 hours you can actually see that it's a good buy price if you are focused on dollar cost average, right? We'll talk a bit about that later. So the top movers, of course, are Helium, continue a meteoric rise, gaining 8.37 in the last 24 hours, 72.18 in 7 days. Decentraland Mana is still doing well, riding on the tail of the metaverse. It gained 7.74 in the past 24 hours. Cardina, a unique token, only scalable at layer 1 proof of work blockchain, gained 19.6 in the last 24 hours, bringing in a total of just under 170% in the last 7 days. IoTex is up 20% in the last 24 hours, and the biggest winner in the top 100 is Mina, up by 44.5%. Percent in the past 24 hours. Its trading volume, of course, is 835.8 million, up 1,468% in the last 24 hours. Now, of course, trending two notable coins are Ethereum Meta, and Lithium. Ethereum Meta's market is about 1.1 million, up 17%, 400 in the last 24 hours. And let me just... And we have Lithium aims to create a currency model that allows retail investors to invest in lithium concentrate. To make an investment in the new energy consumable lithium concentrate, they don't need anything except to buy lithium. So record high, of course, inflation prompts investors to take a closer look at Bitcoin. So currency's value up to also, but so is the price of everything else in the United States. Investors curious in Bitcoin's growth as data continues to show US inflation that rose on the 30 years high. Of course, what this basically means, I thought this David Marcus actually wrote, inflation at 6.2 means that if we keep it steady for 10 years, your 100,000 will become 54,800 by then, right? So 10 years, you are looking at a 50% loss. Now the compounding is powerful force Satoshi is having somewhat right now. So I think in the next video, I will actually cover what the Satoshis mean, because 1,000 Satoshis, if I'm not mistaken, I might be wrong, but either 1 million Satoshis is equals to 1 Bitcoin or 1,000. I can't remember, but I will do some research and come back with the actual facts. So as a result, the high print traditional financial markets took a hit on November 10 as concerns about the runaway inflation and the loss of purchasing power weighed heavily in the minds of the investors and majors indices, right? That is a contrast to the price action of the cryptocurrency market, where it burst the bullish momentum and sparked a 4.7 rally in the price of Bitcoin right after at the announcement of the CPI index. So the news also has a part to play in terms of momentum, but we will continue that strive. And of course, prices are still cheap. If you saw the trend and you look back into the charts, you still see that you can still do a little bit of dollar average over a week to get it all. Just hide this. So according to the recent statement of the former US Treasury, global financial markets appear to be anticipating slow growth and low real estate interest over the next few years, which will gut the ability of central banks to guide the economies. I'm going to share something I think that is very interesting. Just give me a second. Let me just grab this out. I found something that it would be very useful to really understand how does all of this play a part in terms of hedging against the inflation. So I have actually 4 slides that I want to share as a document that I felt that it would give you another perspective in terms of this. Let me save these slides and launch it. I do apologize, guys. Today was a bit hectic and I didn't have the time to actually kind of prepare. But, as always, we'll do once a day live for you guys. Even my light also I didn't even put. Okay, so let me launch this. Just give me a second. It's always interesting when you're rushing for time and trying to get things together. Murphy's Law takes a course of it. Let me grab this. So I'm going to launch my slides. Let me just grab this up. Okay, I'm going to scroll down. Zoom. Full screen. Awesome. Okay. So this was actually from Invest and Answers. If you have not got in touch with that YouTuber, I think he's James is an awesome guy. Very interesting concepts that he has. He really put in some effort, and I thought that I just share just a kind of an extract. So James, if you're watching this, I apologize. I know it's your content, but I think some things I would just want to share with our community. So let me just share this. So inflation, of course, while the news are talking about 6.2%, that's the CPI. Okay, before I even go there, here's the quantity theory of money. Basically, inflation, what it means is that this is the formula: M times V equals P times T, right? Is under monetary economics. And basically what it means, it looks at money supply, it looks at the velocity of money transactions, it looks at prices, and it looks at the transaction size of the economy. So in short, if the money supply goes up, right, the printing of money supply, the prices also go up, because then you will have inflation. So I'm just keeping it simple. So of course, this is a consumer inflation official versus the shadow stats, right? You can go and check it out. This is on all on public data, shadowstats.com. And basically what this chart is trying to say in terms of the CPI as well as the SGS is that right now, today we are back at a 15% inflation over at the US. And the reason why we talk a bit about the US is because most of the things will impact how the US market moves, because most of us, regardless of which country we are in, we are still converting into US dollars. We are still going into the crypto space, right? We are actually investing in crypto in US equivalent dollars, right? So it's always good to know what's happening over the US, because it affects us. And of course, when we convert back, we based on our currency, the strength of our currency depends on which country you are in, you will see kind of a double loss, right, in terms of conversions. So 15%. So what does this mean? It means that your $1 million in the next 10 years, based on today's purchasing prices going back into 2030, just 10 years ago, you have kind of four scenarios. You have the 3%, if inflation is 3%, 7%, 10%, and 15%. But based on today's news, right, based on today's data, we will be looking at 15%. So what this means is that over the period of 10 years, your $1 million when you first started off, by the 10 year, it will be 231,000. So of course, across the board, you can see if it's 3% inflation, it will be 760, 7%, 10%. But this is a frightening thing in terms of inflation. And so far, what we know is that Bitcoin year on year have actually increased up to about average of 60%, right? So how much Bitcoin would you need to actually make your $1 million today equivalent 10 years in the future? And James did a really great job. Basically, he has done this chart. So the answer is actually 1%. And what does this mean? That if you have someone who has $1 million, right, and inflation at 10%, they would only need to purchase, assuming that, of course, average Bitcoin return was 171 per annum. And let's say as a minimum, we take the growth of Bitcoin year on year is about 60%. So you would only need $78 invested in Bitcoin if you own $1 million, right? If you have $1 million in fiat currencies, and if you look at the inflation at 15%, you would only need $97 worth of Bitcoin. So can you imagine that the portfolio that we are always talking about, right? The 50, 25, 25. Although last time we used to do 50, 40, and 10, but moving forward, we actually found that the best dynamics would be 50% Bitcoin, 25% altcoins, and the other 25%, of course, is the kind of a mid cap, things like Solana, Cardano, things that is outside of Ethereum also will be considered as the other 25%. But Bitcoin by itself, 50%, because it is a store of value. And I just wanted to share this. So if you are watching this, then that's something to take note and to think really about that future of Bitcoin. So let me just get out of these slides. So back to this, something to take note, dollar cost average for Bitcoin, of course, what we always do. Let me just look at the charts here. First of all, I will also recognize the trends. I've covered this. I think there's 3 ways to look at it. You could look at a trend. Is it an uptrend that you align to it, right? If it's a downtrend, then you know that the whole entire market, you never trade against the trend. And then you find your support and resistance, right? So right now, of course, we are being supported at the 60,000, and the new support will be at 60. This is about 64,000, right? For Bitcoin, this is on the day chart. So the white lines just shows there's the 2 levels of support. So at least even if it drops back to 60,000 and it was at previous 65 or 69 was the highest that Bitcoin have ever went, you can actually start to do dollar cost average. Just instead of just waiting for your payday, taking $1,000 and buying into Bitcoin, you take the same $1,000, you spread it into 4 weeks. So there will be $250 per week. And some days you will be lucky. And what we typically do, sometimes if you see right now here, this red color bar that I've put is actually a wall of sellers, right? So if Bitcoin needs to break through, it will have 2 breakthroughs, right? You have 70,000, you have 75, and after which you will have that free space, right? And mostly some of this wall of sellers is always done by whales coming in and pumping that money, and then you get all the retailers wanting to sell at a psychological price of 70,000, just stacking on that bulk. So looking at this, if you want to break, Bitcoin has to break this. Of course, now it's coming down. We sometimes we can also look at the 4 hours, how the 4 hours is actually doing. And if you look at the 4 hours right now, this yellow line is the 20 days EMA. So you can see that it's slightly below over 20-day period, or 20 pips, all right, or 40 or 4 hours, right? So 24 hours. Um, you see that the Bitcoin price is slightly lower, and sometimes you might want to buy in here. But for me, if I'm really doing true dollar cost average, I'll just wait for the price to dip below the yellow line, and then I will actually make my trade, right? Or that's one option. The other option is you have two sets, right? So you take this same 1,000, you break it up in 250, 250, regardless of the price, every Saturday, you wake up, go to the market and buy. Of course, you can look at the charts and find out which is the day. Typically will be the lowest on the 24 hours, and see if you are midway or slightly less. Just go in and get the coin. And that you should keep a reserve of money, right? You should have a reserve pool of cash, because there are times where the market might dip 40% or 50%. Those are real big sales to acquire more coins. And this is a long-term play. When you do dollar cost average, it's a long-term play. So if you just got into the game and you started to buy Bitcoin at, let's say, $60,000, right? Uh, over a period of time, when you do your due diligence, by getting on CoinGecko, and every transactions that you make, you record it. So over time, CoinGecko, of course, as a portfolio management, which we have covered many times ago, it will show you what is your baseline, the new baseline. So if you bought 60,000, let's say if you buy one Bitcoin 60,000 this month, and next month it drops to 40,000, you bought a 40,000, the 60,000 and the 40,000 will give you your new baseline, meaning that now your baseline will be at about, let's say, 50,000. So the more times you do it, every time you get bonus, every time you get certain excess cash, and then you're constantly buying this thing, you actually bring down the actual cost of your entire investment, while the price of Bitcoin continue to soar, right? So there will be that momentum of down and up. And but if you take a step back and you look on the macro level, you see that Bitcoin has been constantly rising. It was a beautiful rise. Of course, inside the rise, you have that short term as well as long term dips, as well as highs. So that is the momentum of dollar cost average. You don't really stress much on the price low. When the price is low, you acquire more coins. When the price is high, you enjoy the coins that you bought cheaper, and you get to see it grow, and then you constantly plow that land, feed that land, and over a period of time, you will see that you can, which we'll cover later, when do you take a strategy to take money off the top, right, so that you can have that supply of cash coming in, so, and hedge against inflation. So that's something to take note. So let's look at the market segment. This is T-1. So tomorrow we will see a big dip from extreme greed. We'll be dropping to greed, or maybe slightly worse, because of what happened today in terms of the stock market. I was hoping that there were some changes here, but I see there's a slight increase in terms of the fear index that measures a few parameters on the US stock exchange. So that's something to take note. You can see there's a mixed bag here, kind of a bloodbath, but again, you can be seen as a Christmas sale, right? So of course, never go in all at once. Again, the dollar cost average strategy, there's tons of calculators online. You can go and check it out, and do your own research and math, and you see that over a period of time, even with the 2017 issues with Bitcoin and the growth that we had, we always came back stronger, we always came back bigger, because those kind of crash just invite more people into coming into Bitcoin and learning about cryptocurrency. And we are still relatively, even after 10 years, we are still a very small market, right? $3 trillion compared to all the other four financial asset class, like real estate, business, commodities, gold, and silver. So something to take note, that we are still very much early in the game, and we still have that opportunity to ride this for the next 10 years, right? So 14,000 cryptos, 433 exchanges, 2.8 trillion Bitcoin dominance, of course, 43.1, Ethereum 19.6, top 3 coins, Shiba, KDA, and Pets. Now, Bitcoin, of course, in the last 24 hours down by 4.62, Ethereum 2.16, BNB 4.80, Solana 0.99, Cardano 7.44, XRP 8.45, Polkadot 6.14, and Doge 5.17. They are down. You look at the last 7 days, a mixed bag. Bitcoin, Ethereum are still looking bullish. Solana, of course, had a massive downward trend, but I guess they will still continue to come up in no time. So, price prediction, of course, again, this is all speculation. Nobody has the crystal ball. But Bitcoin, of course, anticipated for 100 to 250,000. Ethereum 10 to 15,000. BNB 1,000. Solana 300 to 350 dollars. Cardano, we are looking at $3 to $5. XRP $20. Polkadot 85 to 100, and Dogecoin $1. So that's all I have today in the news, guys. Hope to see you tomorrow. It's TGIF. We will see myself and Manish there. So take care. Have an amazing day, and we look forward to the weekend. Take care.